let's do this class here because this is more interesting and exciting to me.
Interesting and exciting.
And for the AV department here. Yeah. Oh, he loves it when we make those noises. All right, hey, welcome to our special edition here, Black Friday edition of the FinTips, right? We call it FinTips?
Yeah, something like that.
We wanted to do something different and just kind of share with the public some of the things that we're talking to clients about because, well, you know, we share tips on YouTube and stuff, but oftentimes we're talking about some detailed stuff, some simple things, just depends on where they're at. So we're going to cover that here today. And I've got, I don't know where you're at, I've got some simple things, so that great takeaways for the average person. Mm-hmm. And then I have some of the really advanced stuff, more advanced stuff that we're working on with clients. So would you like to go first, Mr. Eric?
Well, you said simple things, so I'm going to start
simple.
I'm going to start with something simple.
But watch, we're going somewhere.
Okay.
With this.
Yeah. No, I've got a few that are a bit more. You know, we're working on some things, but so the simple, I would say I'm really talking with clients right this second, and have had some that I'm helping, making sure they're getting the backdoor Roth done before the end of the year. The high income earners that are putting the money into the traditional IRA and converting it, because when you convert that money, remember, you can contribute to an IRA or a Roth all the way up until April 15th. But the conversion, anything that happens, that's all on this year's tax. So to keep it all in the same tax year, I'm trying to go ahead and get that stuff done to simplify it for the CPA to get the taxes filed.
Very nice. And very common this time of year to have your CPA, maybe you're meeting with them and all of a sudden you're like, I got to get this done, or have to reverse Roth deposits and things. So that comes up a lot for us here. One conversation I just had with clients, this is a very simple one, was where do your new dollars go in 2023? You would be surprised how often people get that wrong. The spread between what you make now and what you need to live off in retirement. Really think about that, because I had a client that was making $264, family income total $264, but they're going to live on $80,000 in retirement plus Social Security, and it's like, dude, take the tax break now. You know what I mean? You're going to be down tax brackets in retirement, even if you spend everything you wanted to. So really consider where those 2023 dollars go, because money is getting tighter, and so we want to obviously pay the least amount of tax we can and keep those dollars in our pockets there.
Yep. And for me, one that I just did was getting the RMD for the year. First of all, got to get the RMD this year. If we, talking with some clients now, we're about to really start pushing hard on that one to make sure that everybody's getting the RMD done. But not only that, a bit more complex, we had to go to last year. This person just transferred the money over this year. Come to find out, I looked at their statements and really talked through them on this and realized they didn't take the RMD last year. And with them not taking the RMD last year, that's a big penalty. Oftentimes, IRS will forgive it once, so we're working on getting them the template. We got the RMD fixed. We took the last year. We took this year. Now we're getting him the template so that we can get that straightened out. Hopefully, he won't have to pay the 50% tax on that for penalty for that.
You look good over there, man. Look, I look like I'm in a tanning salon or something, and you look sharp as can be. Look at that, man. Look at him over there. Meanwhile, little Dustin is, can I get the orange Trump tan today, please? Hey, I'll add to that. There's a proposal in Congress, actually, to lower the penalty from 50% to 25%. How nice is that of them to do that?
Yeah, what's the catch?
Yeah, right. So if you don't take the RMD, there's a 50% penalty on the amount you're supposed to take, so you definitely want to take that. All right, getting a little more advanced now. Ready? Mm-hmm, mm-hmm. When you have like the basic plan done and sort of the initial budgeting things that we go through with clients, once that's done, I like to look at the total dollars that you would pay in taxes over your lifetime, and then try different scenarios against that. Most interestingly is Social Security. Everybody asks that question. Should I take Social Security now? Should I take it later, or whatever? Let's figure out the total tax dollars that you're going to pay over your lifetime and make the decision based on how many more dollars go in your pocket. That's the easy one there, right? Remember that Social Security, this is kind of silly, but anything income-wise, including your interest and everything that you pay or that you gain, anything over $34,000, you're paying 50% of your Social Security is taxed. You go over that number, and all of a sudden you're pushing 85%. And so the key there is they never raise those numbers. You notice that? Every year they go, oh, the new Roth IRA limits are this, and your income limits are this, and oh, you can put more money away. But that Social Security number of like 25 to 34, it never goes up. So every year people start to get taxed more and more. So let's look at your total tax dollars at the various years of you taking Social Security. It's a somewhat easy one for me to do, but definitely one that you should check out there, because we want to keep them dollars, man.
For sure, for sure. All right, so I just did a video on Wednesday on this, but had a client who sent over a universal life insurance policy and really wanted the breakdown of, is it, now that I've been doing this for 5 years, does it make sense to keep doing it or not? And for that person, their cash value now was $10,000. They've put over 15 in it. Their break even was all the way at 15 years before they could break even on this policy. So the idea was, okay, if we take the money out now, it wasn't for life insurance. This wasn't why it was really sold. It was overfunding the policy in the first place. We put it into the market. Then that $10,000, he continues to contribute the $3,000. He's going to far surpass the break even at 15 years.
There it is.
So that was the idea there. That was something. Like I said, did the video on that Wednesday, so it was a bit of a breakdown. If you hadn't watched that, it's a good one to check out.
Yeah, still looking good over there, man. I'm
Thanks.
still
Appreciate that.
Still trumping it up over here.
Self-conscious today.
Well, you know what I mean? There's a good side and there's a bad side, and I'm getting the bad side here. More advanced.
Oh,
You ready for this?
more advanced.
I don't even think Eric knows I've been working on this one here, and this is not Project X, by the way.
Oh, it's not.
So,
Okay, I'm still waiting on that.
You don't know, I'm working on something, Project X. Nobody here knows about it, and it's the coolest and biggest thing that we could ever do.
Drives me
for
insane
clients there.
when you work on stuff. I like to be in the know, man.
It's been a month and a half. I just started telling you, so
Yeah.
to give you an idea of how detailed it is. Anyways, one thing I was working on a client this week, they are buying a fine dining restaurant, and it is in a major-ish downtown area, and they said, hey, I'd like to know the revenue cycles of fine dining restaurants regionally during all economic cycles. And so they wanted to just get an idea, like, hey, we think maybe there's going to be a recession next year. If I buy this restaurant and we go into a recession, what am I looking at? Drop in total revenue and things like that. So did a whole analysis on that to figure out what should they maybe adjust their offer price to based on the fact that we're getting weaker and weaker, and how to start negotiating that. So.
Nice.
Yeah.
Nice.
Yeah, and it's, by the way, local clients, so we may get something out of it. You know?
Okay.
I'm
Okay.
just saying.
All right. Well, so I've got a good one here. I'm going to throw out this fancy stuff. This is one that we technically don't do, but we were still able to help the client with and facilitate. It's kind of passing up a little bit of the money that we're going to be managing, but it's what's best for the client. So, it's what we're going to do. So for this one, he had a SEP IRA, and he is a real estate investor, and he flips houses. And the idea is he owns tons of rental homes, so his income is always going to be very high. There's no good way around this unless he just sells off everything eventually and tries to strategize and live with less money for a while. Multiple things we've looked at over the years, cross segregation analysis, doing different things and buying bigger properties, but he likes the lower income homes. That's what he works with.
Yeah.
So what we looked at doing is taking his SEP and then linking him up with another company that does the self-directed IRAs. So not only doing that, but converting the SEP to Roth. So now he's going to take this money that he has in his SEP, he's going to have to pay a fat tax bill this year, but every year moving forward, he's going to have Roth money. He's going to flip houses. On average, when he flips a house, he's buying the house for $120,000, $150,000, puts a little bit into it, and then he ends up making 20+% on every house that he does. He's historically done this, done very well, very smart guy with what he does, gets the deals somehow off the market. That said, this guy's going to be able to continuously grow this portfolio. If he does, 2 a year at 20%, $200,000. I mean, that's $40,000 in his Roth now that's going to continue to grow. He doesn't have to show this as income for his taxes because it's going to help him there. This is going to be money that's tax-free money down the road for him.
That is a cool one there, and that's one that goes back to the total tax dollars. How many total tax dollars would he pay now between the rest of his life versus, let's take this hit now, let's make it happen,
Yep.
and therefore you have no tax issues later in life, and maybe some health insurance prospects there as well.
Yep.
So I'll stick with this on my last one. I'll stick with real estate. So did you know that the U.S. national average cap rate is now lower than the 10-year Treasury? Meaning that if you don't know, real estate people know what I'm talking about, but your yearly income ratio compared to the current value of the property is your cap rate. And so it is now, on average, of course, across the United States, it is now more advantageous to just buy a 10-year Treasury. And so I had a client, we were talking about this, and they said, okay, but I'm still going to buy real estate. This is part of my life. This is what I want to do. But in the meantime, can you show me a way to earn more than if I go buy real estate? In other words, to have the dividend income, the interest income, the total payout to him on a monthly basis be more than what I would make if I were to just pay up for a property now and collect rent that maybe there's not such a large cash flow there, but what's the difference, right? So essentially what we're doing is we're pretending that he did buy real estate by using the market, getting the same return with the whole goal of, hey, when real estate gets a little cheaper, I'm going to take that and hopefully make more. So all we're doing is saying total dollars. We can have more total dollars over here and skip real estate for the moment. We can't prove that that means more dollars. And at some point, we're going to switch it, and you'll go ahead and do that. So
Nice.
it's a very cool, different way to look at it there.
I like it. I like
Yeah.
it. Well, that's it for me, baby.
Good till the
That's
last
it
drop.
for me. Good till the last
Come
drop.
on, you don't even use it. The guy gives you the whole thing, and you.
Well, there were others too, and I feel bad. Like I got to figure out the other ones. But I was
No.
thinking, like maybe something like, let's go buy some stuff because it's Black Friday. I don't know. Just,
Black. Now I do like Black Friday. I'll give you that.
there you go.
Well, thanks for watching. I hope you had a great Thanksgiving. We'll be back next week, of course, to do this all over again. And enjoy your weekend. See you. Done.